You want to make $1,000, 10K every month? I like this energy. I can work with it. Just put $9 million in VOO. And if you don't have it right now, invest a little bit each month. You'll get there eventually. All right, not fast enough. Have you considered SCHD? Growing dividends and compound interest is magical. All right, you're a risk taker. Have you looked into realty income? It's a single stock, so you gotta be careful, but it has a pretty high dividend yield. And it also pays every month. Triple net leases, they're all the rage. I see you want the good stuff, the stuff that might set you back years or push you forward decades. This is MSTY. It's paying a dividend 16 times more than realty income, 24 times more than SCHD, and 73 times more than VOO. But that's just the current yield. Last month, it was 113 times more than VOO. With yields this high, investors have been able to put their money in, get all of it back out, and end up with shares that pay out some of the largest dividends on the market. A literal money printer that paid for itself. This has been going on for months. If you bought and held since inception of the fund, measuring by total return percentage, you're beating the S&P 500 by 14x. The average monthly dividend payout since April 4th, 2024 is $2.56 per share. MSTY is trading around $20 today. So to make 10K a month or $120,000 a year, we would need about 3,900 shares, which costs $80,000. So if the averages work out the same for the next 8 months, an investor could make all their money back and still have shares paying them in month 9 and beyond. Now, of course, watch out for taxes, but even so, this is clearly not something we should be ignoring. So we know the historical performance at a high level. Now we have to get to the problems in 2025, because as quick as you can make a profit from MSTY, the market can take it all back just as fast. The more you know ahead of time, the better decisions you can make. Hi, I'm Raj. On this channel, we talk about money. I've been investing in dividend stocks and crypto for years, and more recently, covered call ETFs, even going so far as to make a few videos on those topics here on this YouTube channel. So something like YieldMax's MSTY that uses synthetic covered calls based on MicroStrategy that is on its own making headlines with how it's using Bitcoin is right up my alley. I've been waiting to make a dedicated MSTY video because I needed just a little bit more data, and I got it recently. There are 4 problems on the horizon for MSTY, and investors should know about them because we tend to focus on the rewards, not the risks, and they are a package deal. Regulators might be stepping in, sustainability of the yield is in question, and people are selling their tried and true assets, even taking out loans to get a piece of the returns. And increasing leverage on risky assets is usually a sign the markets are closer to the top than a bottom. So issue number 1 is that the fund is getting more popular, and this adds noise and confusion in the comment section on Reddit posts, YouTube videos like this, and basically anywhere these funds are discussed. People see the historic charts and see the insane performance and only focus on a limited high-level view. But if we zoom into the charts, we see the reality of a high-risk, high-reward investment. In the past month, MSTY is down 13.2%, and in the past 6 months, it's up currently 4.8%, which is far off from outperforming the market by 14x. If you take a look at March and April of 2025, it was actually down 30%. The S&P 500 only ever dipped to -15 during that range. Zooming out further, we can see that most of MSTY's returns came from a limited window since inception, September to November of 2024 and April to May of 2025. In the very early days of the fund, before Bitcoin and MicroStrategy made its way up the charts, MSTY was actually underperforming the market. And even once it did start outperforming, it came back to meet the market a few times before ultimately outperforming. Volatility is how certain investments get sky-high returns, but also how things fall fast and how the price gets way lower than we want it to go. The reality of this fund is that it has been very much in season, but only for a limited window, which did the heavy lifting. The swings up and down can give investors a lot of emotions, which makes investing harder, the opposite of what we want. Not that the S&P 500 has been a breezy walk in the park the past few years, but compared to MSTY, it's a much smoother sail. Most of the time, investors were likely down on their positions because most people were not invested for the entirety of these major moves up. To add to the concern, we've never experienced a market with this fund in a crypto bear market. Nothing goes up forever. Not only can investors totally psych themselves out of a buy and hold strategy that seems to have worked well in the past, it could be a setup to hold in a market environment where the price and yield will come down and stay down for a painful amount of time if history is any indicator. This is the reality of being a new holder of MSTY. You have to earn your profit by holding, and it's not guaranteed you'll end up with a money printer. So those first 8 months, maybe more, will be very challenging. Number two, with more attention on the buyer side, there's more attention on the regulator side. This AOL.com article highlights the SEC's 25% options limit for funds, which means there is a cap of exposure to a single issuer. There are solutions, like a change in MSTY's prospectus, adding direct Bitcoin exposure, or even just launching a second fund. In either case, the issue here really isn't the law. It's the fact that there is an upper limit on options to draw from. The upper cap exists both from the synthetic cover call strategy and the market options to use, which isn't necessarily a bad thing, because if one fund owned most of the option supply, the fund would basically be trading against itself and investors really wouldn't be earning anything. It would be like playing a game of chess against yourself. Who really wins the game? So the takeaway is that there will always be a max limit to how much we can extract from this fund, even with the insane performance. The article also mentions addressing this concern will add risk to the funds, but problem number three is way larger. Bitcoin is becoming more appealing to companies. MicroStrategy isn't the only game in town. Companies like Riot, Tesla, and GameStop, and many others have Bitcoin on the books. Now, it's not nearly as much as MicroStrategy, but as Bitcoin and the way MicroStrategy is using it becomes more of a proven method that is beneficial to companies, more companies could adopt the same strategy, which could potentially move capital flow from MicroStrategy to the new players in the space. That would in turn move volatility as well. Now, of course, this is a hypothetical situation, and I'm sure YieldMax would step in and create a fund to capitalize, but it's important to remember that markets can shift like the wind. It only takes one domino to fall before the others start to fall as well. On the other side of this problem, because MicroStrategy is leaning heavily into Bitcoin, any downswing in Bitcoin is going to be felt by the stock and MSTY as a result. If Bitcoin drops below a critical level, which is MicroStrategy's average cost of $70,000 per Bitcoin, this whole strategy would likely crumble, and max loss, maybe even more than max loss if you're using leverage, is on the table. Number four, Bitcoin is becoming less volatile. Yes, it is still capable of wild price swings, even on the daily time frame, but the key issue is that Bitcoin is seeing diminishing returns in each of its bull runs. As the volatility of Bitcoin goes lower, volatility of MicroStrategy will get lower, which means yields of MSTY will inevitably go lower as well. So no one can tell you when it will fizzle out for MSTY. It could be this market cycle or decades from now, but the overall trend should be on every investor's radar for the long term. Do I think MSTY is going to go to zero or is a terrible investment? Absolutely not. I think it might be worth the risk for some investors, but it's never a bad idea to know what your conditions of exit are for your investment given some of the known risks. So there's two paths MSTY holders can take to maximize returns while benefiting from the current market dynamic. One is to try to find the biggest opportunity in AI, the most revolutionary breakthrough since the internet, and see if it's worth it to start a position with those huge dividends from MSTY. Or two, try to time the crypto cycles to know when to get in, but also when to get out and not get caught up in a bear market and watch MSTY lose value and watch returns dwindle. In either case, one of these videos on your screen or in the description will help you out. I'll see you over there.